Good morning, everyone, and welcome to the 2021 edition of our series, FinTech Fridays, brought to you by BDO Australia. My name is Tim Ammon. I'm BDO's Global FinTech Leader, as well as the National Financial Services Leader here in Australia. Before we kick things off, I would just like to quickly draw your attention to the housekeeping slide that is currently showing on your screen. To start, you are all automatically muted, but we'll be accepting questions throughout the session, and you can submit these during the question tab. We'll try to get to as many questions as possible. However, if we cannot respond to your question, we'll follow up with you after the webinar concludes. If you are experiencing any technical difficulties, please click the support button, which is one of the bottom tabs on your screen. And finally, this session is being recorded, and all registrants will receive a follow-up email containing the slides, a link to the recording, access to register for future sessions, and the speaker contact details for all of us. At BDO, we are proud to support the fintech sector. Our purpose in carrying out this initiative is to assist all those operating within the fintech space a platform to ask questions and understand more deeply the sector in which they operate. In August last year, we relaunched our FinTech Fridays in the form of webinars in an effort to unpack the key trends and themes within the fintech sector. Our first webinar focused on the sector as a whole, looking at the immediate impact of COVID-19 on fintechs, the growing access and demand for fully digitized customer experiences, the evolving regulatory frameworks, how the COVID-19 government response boosted the fintech space in Australia, and how FinTech Australia itself was supporting the sector. Today, we'll be reflecting on the fintech community 1 year on from the pandemic and taking a look at what's next for the sector. In last year's webinar, we were joined by Rebecca Schot-Guppy, and we're lucky to have Beck join us again today. In case you don't already know, Beck is the CEO of FinTech Australia, the peak fintech group in Australia. FinTech Australia represents over 300 companies in Australia on key policy issues and supports the local fintech ecosystem with events and partnerships. It also works to grow the Australian fintech sector's influence abroad. We also have cheerleader Marc Orchard, who's our BDO's very own Director of Startups. And Marc is the founder of our BDO for Startups program, Australia's first professional service offering built specifically for startups and scale-ups. The BDO for Startups team are committed to helping early-stage, high-growth companies through education, services, and investment. Thank you both for your time today.
Thanks, Tim.
It's a pleasure to be here.
Thanks, guys. So what we'll do first is talk a little bit about the fintech ecosystem, kind of 1 year on from when COVID began. If I flash back to March last year, people were fleeing the big cities, heading off to the countryside, bunkering down. I used to come into Sydney, walk the streets, no one here, paper bags floating about. Came in on the 17th of March, as everyone probably knows, that's the day you're allowed to stand up in pubs and have a beer. So you can see the difference in the landscape here within Australia. Obviously, we're very lucky, in comparison to other countries. But I think it's probably a good time to reflect on the last year in terms of the fintech world. And so I guess Beck, we'll start with you. In your view, what's your sentiment in the industry as a whole, and what are some of the specific reasons for that?
I think the sentiment as a whole is super positive. So the government over COVID has significantly not only invested in things like JobKeeper and allowing high growth companies to access that, but invested in fintech more broadly, investing in digital ID, has invested in promoting Jane Hume to the Minister for the Digital Economy and into Cabinet, which demonstrates the importance for the sector. We've seen companies obviously hit major new heights, including Zip, Afterpay, Athena, Wiser. We've seen 86400 be acquired by NAB. So I think the sector, particularly in our larger end, there's huge positives, and it's grown massively over COVID. But then we've still got to worry about, our smaller scale-ups that are coming into market. So I think probably the only thing that we really need to look at is what is the access to capital for them. And another huge positive from the government was their commitment to R&D, and they reversed basically what they're going to do. There's more stuff they can do in R&D to make it better for the sector in relation to software and also the rebate. But, I think we've seen a real positive sentiment put on tech and focus, and I think that's more broadly how the entire sector is feeling.
Thanks for that. I know we'll touch on a few of those points in a bit more detail as we go through this morning. But Marc, I guess from your perspective, if you look over the past year, what's your sense in terms of the sentiment in the sector that you're seeing up there in Queensland?
Yeah, great question, and thank you, Tim and Beck, for having me as part of this session. But no, I'm bullish on fintech, and I think that the last 12 months has shown that the fintech community in particular is very robust and very versatile. And if anything, we've seen companies holistically do quite well, because we've had about 10 years worth of digital transformation happen in about 6 to 12 months. And so Brisbane isn't typically the fintech capital of Australia, but we've seen a number of fintechs coming through Queensland, which is where I'm based, which are like high growth, exceptionally high performing, typically through payments and processing. And from our point of view, I think the first 6 to 12 weeks of COVID, everybody was just a little bit shell shocked, trying to figure out what the new normal was going to look like. But once people found their feet, and once the people realized that from a capital point of view, the VCs were still investing, that there was still access to capital, and once we started to get to the point where the markets came back in particular, there's been a real bullish interest in fintechs more broadly. So from my point of view, the pandemic, whilst it has been like a real social challenge, has actually been, for the most part, an accelerant for a lot of high growth companies, particularly in fintech, who had a really scalable business model and a market demand that they were serving.
Okay, thanks for that. So Beck, I guess just focusing a little bit on FinTech Australia, you've actually grown during the pandemic, and I guess maybe if you can just share a little bit about the secrets of your success, driving growth in FinTech Australia during the past 12 months.
Yes. First starting point is actually we didn't think we would grow. We actually thought we'd have a 33% churn membership. But not only did we grow in members, we grew in corporate partners. And I think that's for two reasons. I think two main reasons was we really put our members first. So everything we did had a member first lens or was community driven. So at the start of COVID, we reached out to every single member to find out what their needs were. We were really, really active in lobbying the government in relation to JobKeeper and other support measures, such as the funding for non-bank lenders and the TFF. We've also been super positive in relation to lobbying and R&D. And I think, we started to convey that messaging better. And in a pandemic, people realized the importance of an industry body to get their voice heard. I think we made 6 or 7 confidential submissions to government. So over the weekends, we were drafting pages and pages on how fintechs and tech needed particular support to get through it. But everything that we did had that member first lens, and I think that was really critical for the sector. So more broadly, for the people on the call, we started 5 fintechs on a Friday. So if you're not signed up to our newsletter, we send out 5 fintechs every week and we profile them. We did member spotlight series, and we also partnered last year with Tier 1 people on the FinTech Australia podcast. So we really tried to highlight our members through the pandemic.
Okay, that's great work. So we watched the video from last August, and you made a couple predictions. So I just wanted to, you were predicting the future back then, saying that you thought the next 6-7 months would be about 2 different tales. Bigger fintechs would continue to grow and scale, and some fintechs would struggle with the wind back of JobKeeper. Obviously, at that time, JobKeeper, we thought was ending. It's been extended, but now we're coming to the end of that. But you also thought that there'd be an opportunity for alternative lenders to small and medium businesses to help kickstart the business. So I guess in terms of reflecting on some of your predictions, are you starting to see more consolidation in the market, or are you starting to see a good incubator pipeline of new fintechs coming into the space?
I think my predictions are pretty spot on, to be honest.
Yeah, they were pretty good. Yeah.
I definitely do think we saw the bigger fintech scale. I think they got more market share, whether that was in consumer lending, buy now, pay later, or in partnerships with banks. I do think some of the smaller members have struggled to gain traction because, you know, they really do want businesses that have proven track records if you're one, going to invest in them, or two, procure them into a company. We have seen our small business lenders do really well. You know, Plenty release some great results. Prosper and Get Capital are still going very strong. I do think we've still got to wait for 2 weeks to find out what happens in that small space, but we've definitely seen the tale of the two ends, I think, play out.
Yeah, I think it's probably quite interesting because I think, you know, at 30 June, if I put my audit hat on, 30 June was probably too soon to really look at the impact of COVID because it was just sort of the last quarter. And then as you're looking at 31 December results, we're starting to see, you know, either those scaling up businesses. Some of my clients have done, you know, really well. And clearly the clients that were able to get access to cash pre-pandemic are sitting relatively well. And I know Marc will talk a little bit about, you know, access to finance, but I think it's going to be, for me, the critical points probably the next 3 to 6 months to make sure that the capital is flowing through the ecosystem. So hopefully that will be the case. And, you know, I'll get both your thoughts on that as well. But Beck, are you seeing, because, you know, obviously buy now, pay later, debt collectors like Indebted doing really well. Are you seeing any trends in the subsectors that you think are going to really make an emergence over the next 6 months?
Well, we'll continue to see companies in that consumer data rights space really start to scale when more banks come online and more consumers are aware of the regime. So we will see some of that personalized data, so the Frollos of the world, the pocketbooks of the world, really be able to give you some good insights. I do think that we will continue to see neobanks get traction. So obviously there's been some consolidation in that space and some big changes, but 86,400 with the injection of capital, if it's approved from NAB, has the opportunity to scale. Up is the 5th most downloaded app. More and more people are turning to the likes of Athena or TikTok for their mortgages. So I do think that, you know, while buy now, pay later has been amazing and it will continue to grow, obviously with CBA investing in their own competing product, we're going to see a lot of changes in relation to the consumer data right and the ability to switch and all those kinds of things that digital businesses enable. Afterpay money is pretty exciting. You know, I think there's a lot of things happening, but I think the consumer data right will really underpin a lot of the changes that we'll see in the next 6 months.
Yeah, I would probably agree with that. Marc, I guess just in terms of, you know, obviously the buy now, pay later, and Beck sort of alluded to with, you know, CBA having their own product, you know, and it sort of competes with their Klarna investment, you know, alliances, NAB and Afterpay. So I guess, you know, are you seeing any other fintech subsectors that are going to be looking to probably grow and come into the market in a big way? It's easy to look back on buy now, pay later because it just seems like they've really accelerated the mainstream, you know, very quickly. So
They certainly have, and to be fair, it's fascinating that Commonwealth Bank has had put such a big investment into Klarna and then has come out with their own. It's fascinating that it's like the banks want to become buy now, pay later, and the buy now, pay later companies want to become banks. And so it's fascinating, this consolidation or all this collapse of different service offerings into, like, I guess, a scalable business model long term, right? But I still think that there's still a lot in payment processing, like in regards to Stripe being valued at $95 billion with a $600 million investment. And I know they're not Australian, but we've had a couple of VCs in Queensland who have invested in both local and international startups doing payment processing in third world countries or places that are traditionally non-banked, who are growing in like numbers that I was just astounded by. I think that there's actually, as the world becomes a far more digital place, the fastest growing company that I'm working with at the moment is a fintech that specializes in cryptocurrency exchange, and they literally in the space of 12 months have had done 10,000% month-on-month growth, and it's like it's absurd numbers. And so for me, I think that as the world comes online, as Beck mentioned, this new data situation where we, particularly in Australia, we become much more conscious of the data that we give to our financial institutions, but then the freedom that gives us to be able to almost have a portfolio or suite of companies that we work with personally to maximize our personal situation. I think that we're just going to see a real interesting play in this payments processing space that is got, I just think that the sector itself is so huge that we completely underestimate how much growth is still left in that space. And so for me, it's that buy now, pay later merging into payment processing, and the banks and the buy now, pay later kind of merging into this interesting grey that I find the most fascinating at the moment.
Can we just jump in there for a second? I think payment is a great segue, because COVID has changed the way we pay in a lot of respects. You know, I may have been using tap and go for months on my phone or paying on my phone, but how many people now carry cash? We've seen a decline in cash. But, you know, QR codes weren't a huge thing in Australia prior to COVID happening. Now we all know how to pay with a QR code. So are we going to start paying with a QR code? So I think you've hit the nail on the head, and I should have touched on it. The way we pay is going to be completely different. Are we actually going to have to make a physical payment? So we've already seen changes with Uber where you don't actually have to physically pay, they pull it from your own. So I think we're going to see huge changes in the payment space and how we engage with paying other people and how we pay for services. So I do think you've hit the nail on the head with it. There'll be more stuff in the payment space coming.
Yeah, and it's that's our next month's topic, the payment space. So I think that's going to be a pretty lively one, because I think, and I guess we'll come to the global landscape a little while later, because I do think, the Australian incubator for fintechs is a great place for people to, basically outsource this knowledge, from a global perspective. So we'll touch on that in a bit. I guess in terms of, Becca, you're starting to see big banks starting to come back to the RegTech, sort of community, because I guess, we talked a little bit last month on that particular topic. But, when I hear the big banks, they've got a war chest for almost like acquiring fintechs. But then if you look at that solution piece, are you starting to see the big banks coming back and talking to RegTechs about how they can drive a better customer experience from a big bank perspective?
If we rewind just a second, COVID put the big banks in some of the best positions they've been in a very long time. So, the TFF that was created by the RBA actually gave the big four the cheapest debt they've ever got. So we've actually seen people move away from small lenders or non-bank lenders because of the headline rates that the big four can offer. So because of their market share, they have and funding behind them, they have the ability to, one, acquire fintechs, but also to invest in fintechs, and also then to onboard fintechs, look at their product, decide if they want to invest, and then debank them. So we're seeing a bit of a problem at the moment with the big four banks debanking our fintechs, which is a little bit anti-competitive. But I do think that one of the key things that you were talking about is that whole procurement cycle and innovating from outside in. And, I do think that the big four may be looking at acquiring and investing, but I think we forget about the banks underneath. So the Macquarie's, the Bendigos, the Mutuals, and I do think they're coming back online. They've come back online a lot slower than the big four in relation to investing and rolling out innovative products, but they're the ones that are now really, really looking at what fintechs they can use to drive efficiency and also RegTechs to drive compliance. So, and I think we will see this more and more. Sorry, I don't have COVID, everyone. More and more, more and more in the, particularly in the mutual space in relation to open banking. So what products can they bring in to help them with their APIs? So something like Bizza that may be their rails, or Frollo that may be their rails but also be their white label product behind their banking app. So I think we're going to see more and more mutuals trying to collaborate with fintechs because they don't have the tech team or the power behind them like the big four do.
Yep.
Yeah, I'd probably agree with that, because I know pre-COVID, I was having a lot of conversations with mutual banks because they've been on that customer journey trying to figure out how they can engage with members. And obviously the logical connection point is fintechs. I think obviously the pandemic has sort of slowed some of that thinking. And now obviously, we're advanced with CDR. So it's a great, there's an alignment of stars in terms of that fintech group, probably talking with mutual banks. And obviously, I think the three of us have a big role to play in terms of how you can connect, the right people, which is obviously the fun part of the job. Also, if I look at just coming back to the big banks for a second, because we know they have the big war chests, but, I was talking to one fintech that potentially is going to be acquired by one of the bigger banks, and the founders are almost torn, because there's that success of being on the radar of a big bank, but also that feeling of a potential loss of control, once you're sort of, you're acquired by a bigger bank. So Beck, are you starting to see that when you hear, members that are thinking of maybe partnering with a bigger bank or being acquired by a bigger bank? Is there a sense of relief, or is there a bit of angst because these guys are obviously very creative and like that innovative sort of spirit?
I think there's both. I think that any founder that goes into it, while they're not actively looking for an exit, ultimately they start a company to get an exit, and being acquired by a big bank or a professional services firm is sometimes the perfect exit. They may have an earnout, so they may need to work for the bank for a few years, but I think everyone does go into a business to have a successful exit. But then I have seen founders that have struggled with the loss of control and then dealing with a less agile organization. And I think, you got to take the good with the bad. FinTech Australia has been very supportive of the 86-400 acquisition because it allows capital to be recycled into other innovative companies. So, investors also go into a business for an exit, and we need to see more and more exits to allow more capital to flow into the fintech sector, to allow more early stage successful companies to grow.
Yeah, so Marc, maybe just picking up on that point around access to capital. If we're looking at the economy, typically 4 quarters after that things fall off a little bit of a cliff, after a pandemic, are you starting to see, and I guess we don't know because as Beck sort of alluded to, we have to wait 2 weeks, but in terms of capital access, where do you think that that's going to be an issue for fintechs over the next 3 to 6 months?
I guess I say very yes and very no at the same time. This is one of the most unusual funding situations I think that we've been in, particularly as an early stage high growth company ecosystem. We literally have come just through a pandemic where for a good 3 to 6 months at the start, a lot of investors pulled back. They looked after their portfolio companies. They kind of tried to get a bit of a feel for the grid, what was going on. FinTech is unusual as well because it's probably the most sophisticated vertical in Australia. So there's a lot more capital typically per startup or per high growth company in FinTech than almost any other vertical in startups. But literally in the last 6 months, with Bitcoin shooting up, with cryptocurrency being super interesting, with NFTs now becoming a thing, with a whole heap of big rounds of investment for some of Australia's largest VC funds. I'm seeing a lot of capital, but I'm seeing less deals being done, if that makes sense. And so what I found is a lot of the startups in FinTech typically have a lot of options when it comes to capital. Usually high net worth investors, particularly those who have made money in banking or investment banking, are more interested in potentially investing in something or an industry that they know. Quite a few startups that we we are working with in Queensland are looking overseas and are getting in interesting offers for investment from Hong Kong, Singapore, South Korea, and sometimes North America and or London in the UK. Obviously, it's been really tricky not being able to travel these places, but actually investors have been really great getting onto Zoom calls and actually spending time and chatting to Australian founders, which has been super unusual. Usually as a founder, particularly a founder doing a Series A round, you're traveling around the world trying to get that across the line. And so I don't think it's certainly never been easier to find capital, but it's also super competitive. And I would argue that actually the type of capital that you need, it's really hard to raise like this in-between round. This like $1 to $2 million seems to be harder than getting a $2 to $5 million round across the line, or like a $500,000 round across the line. And so I find that super fascinating at the moment, Tim. Like it's a really interesting, unique time in market.
I reckon we have a huge part to play in that, right, though? So Australia does not have a very strong angel network, and particularly an angel network that's willing to invest in fintechs. Unless you know fintech very well, which you touched on, Marc, you're not going to invest in products that you don't understand or seem very more comfortable investing in property or things that people know really well. And I do think, and you know, that may be a progression for FinTech Australia along the lines, but we have a role, we all have a role in educating the angel network or sophisticated investors about FinTech to make sure we can solve that early stage funding gap.
Well, I mean, that's one. Well, there's such an opportunity there as well, right? Because like realistically, if you look at like the early backers of some of the best companies that we've had come through, that their returns are astronomical. Like it's, I guess like for a lot of people, VC or angel investment has never been an asset class that they've really considered, particularly if they come from property or mining or so forth. But I'm seeing, must admit, like a lot more interest in this, like 1013 up here in Queensland that's like, you know, associated with Steve Baxter. But I know that Airtree down in Sydney and Melbourne are working on angel education to try and get more people into like early rounds of investment. But I tell you what, there's such a big opportunity there. If we work out how to get more capital, and one of the reasons, Tim, that I actually came to BDO was that I knew that if we could internally build an infrastructure and a skill set for startups, that we had access to high net worths and family offices that we could potentially partner with this early stage capital piece. Like if we fix that, like that really changes our place around the world in regards to our position as a potential global fintech hub. So like super bullish on this being a big opportunity.
But we also sorry, can I continue on this topic for a bit?
Yeah.
I also think there's a huge opportunity here in relation to changing a few of the government rules in relation to investment. So can we change a few of the ECVLP guidelines that don't allow investment into fintechs or insurtechs because they're considered financial products? Well, that's very limiting for early stage investment funds. But you know, there's something that I've been talking to actually Lauren Kaplan, who used to be a director of FinTech Australia, but is now one of the heads of StartMate, and she's based in Queensland now, is that the sophisticated investor test is also very limiting the asset. And so a great example, someone like myself, I've been in FinTech for 3 years. I know what a good business is. I know what I want to invest in. But I would be precluded based on the assets test from being considered a sophisticated investor. So is there ways that we can put a framework in place in relation to experience and all these kinds of things that allow more people to make a knowledgeable choice about investment, but also it actually allow more women to invest, because typically women are actually precluded based on the assets test for investing in early stage startups.
Yeah, that's a super good point.
So I think there's some change there too.
Yeah, you guys are definitely going off script. You're covering off a lot of different things we're going to cover going forward. So that's good.
Sorry.
No, that's good. That's good. So, you know, we'll touch a little bit about some of the points, I guess, in terms of changes in the future. And Beck, you probably talked about, you know, some of those matters. I'll ask you a specific question in a bit about what you're doing from an advocacy perspective. But I think one of the audience questions that came in was about impediment to startups, you know, and I think you guys probably touched on it, you know, on some of those points that you just raised in terms of access to capital, talking to angel investors, etc. And obviously, Beck, you just mentioned about, getting the right people to make investments. Is there anything else in terms of, if you're giving advice to fintech that's thinking about doing a startup, what are some of the other points that they should be considering?
I think there's three main points. Get really strong advisors, both on the corporate finance side, but also on the legal side. Like, don't just go and get, the lawyer down the road. Make sure you go and get some proper advice. Things like your AFSL, your credit license, all those kinds of things are complex, and you need to make sure that you understand the rules and you're playing in the right space. Also, go and check if you can play in, the enhanced regulatory sandbox. The other thing I would say is, something that FinTech Australia should be championing as well, but the procurement cycle is long and hard. Don't think that you're going to go and sell your first client within, their first month. It might take a year. So go and start somewhere small and start building traction to give the bigger players in market confidence that you can do it. Partner with other fintechs on different things, go and speak to other founders. But in relation to advice, the capital piece will definitely be hard. Make sure you get strong advisors around you, and make sure you understand that, the procurement cycle in fintech and selling to banks is not 3 weeks.
No.
A year or 2 years. So just be realistic in relation to how you go about it.
That's probably good advice in terms of, we're dealing with some of the big banks, and going through the procurement kind of process can be extremely painful, and we're relatively big. So I guess in terms of, the fintechs out there is seek advice, and also understand that people have been through this pain before. So definitely leverage, the path that's been forged, rather than trying to go at your own. Marc, I guess anything you want to add on that? And I guess, if we take a step back, if I go across the street and you talk to one of the, you go to one of the fintech incubators, everyone's got a great idea. I guess it's just a matter of how that great idea comes into a business model that can actually hit the market. So I guess, what advice do you have in terms of that?
Yep, that's a great point. And so I guess when we started working with early stage high growth companies, and we call startups and scale ups that because we found that a lot of people had different opinions as to what a startup or a scale up actually was. But most early stage high growth companies, and particularly those who are integrated in the broader Australian startup ecosystem, are super sensitive to problem. Like they typically have identified an issue or market that they feel like that they can fix, and typically have a decent solution, Tim. If I'm honest, like they actually don't do a super bad job of putting together a minimal viable product. But one of the things we do find quite often is that startups, and particularly those who are pre-revenue and oftentimes haven't taken a business to market previously, really struggle with what I call their minimal viable business model. And so going back to kind of what Beck and Tim was saying, like understanding your key unit economics and how you're going to be able to drive a transaction, and if that's at an enterprise level, how long that sales process is going to take, and realistically what the type of engagement is going to look like, and how vulnerable that process is going to be, all the way through to your more typical like your direct-to-consumer fintech arrangements, where oftentimes there's a freemium model and it's a traction and volume play. One of the things we just find, Tim, is that people completely underestimate how long it takes to get to a critical mass of traction, whether that be in enterprise clients or whether that be in direct-to-consumer engagement, and then turning that and converting that into paying customers, which means that they typically have very ambitious growth targets and financial metrics that they've put together for potential investment, and oftentimes they just don't hit that. And so when we are talking to startups, and particularly in the fintech space, it's being super sensitive to your cost of client acquisition, your customer lifetime value potentially, and being able to reverse engineer your gross profit and your unit economics to be able to build a business model that we would call default alive versus default dead. And default alive to us means that if you get to a critical mass of clients, it means that you are gross profit like high or gross profit positive, and net profit flexible, which means that you have the chance to either burn cash in growth if you need to, or to be able to, like in say a pandemic, pull back on some of those expenses to be able to be net profit neutral, But the idea is that that then gives you choices for funding, it gives you choices for scale and growth. And particularly with investors, they seem to, particularly over the last 6 months, because there's been so many good startups on the market, like requesting meetings and asking for investment, those who have the capacity to scale with the money that's given to them, rather than just keeping their working capital costs and keeping alive, have seen a lot more traction in regards to really great term sheets. And so the sheet that we've just brought up here, when we're talking to startups, is that oftentimes we find that businesses struggle to understand which part of the life cycle they're up to, and they make decisions that are inconsistent with the scale that they need to hit at that particular point in time. And particularly when it comes to founder attention, I'm mindful of the fact that a lot of the fintech founders in particular are super strong in product. They either have a really great no-code product that they're getting validation for, or they have a technical team that has built something that's actually very robust. But oftentimes they lag when it comes to a sales strategy or a go-to-market strategy, which means that they get stuck in this seed, accelerator, and high-growth venture phase, which is typically somewhere between $150 to $1.5 million worth of revenue, and a company value that's somewhere between $500,000 to $5 to $10 million. But going past that requires you to break through on one of these go-to-market strategies, or having a really strong channel to market that you can really take. Like, and if you think of an Afterpay, or if you think of Air Wallets or so forth, like they had a really strong vein of customer demand that they tapped into really early on. And so from my point of view, when we're talking to startups and how we help them to grow, our goal is to help them to be able to segue through each transition point of what we deem our start to scale framework in a way that makes the whole business aligned and consistent. We find that typically the startups who struggle the most are when their founding team is acting like a Series Plus company. They're building a really sophisticated product, but they've struggled to raise money at a seed accelerator round because they haven't got the traction they need to be able to demonstrate they've actually got product market fit. And I think that that's like the one thing I wish that more startup ecosystem programs talked about, was actually the financials and the metrics behind those financials that allowed you to demonstrate growth and to make sure early on that you had really strong demand for what you were building. Does that make sense, Tim?
Yeah, that's great. I like the infographics. We will send out the slide at the end as well. It's quite interesting because when I deal with a lot of the fintechs, the CEOs and founders are super passionate about what they do, and so I think it's that balancing between financial education and how it becomes a profitable business, assuming that that's what their end goal is trying to do, versus, that Beck alluded to, people come in and they might be looking to be bought. So that could be their strategy. But even if that is their strategy, just making sure that they're running that business so they're in the best position for the valuation to be bought. So this is part of the reason I love the sector, because you come across interesting people and great ideas. But I think when I put my accountant hat on, no one really likes to talk accounting, but at the end of the day, the dollars sort of make sense, so it is a bit of fun. I like having, we've run a few scaling up workshops here, and it's quite funny to watch the teams and that sort of internal tension between CEO and the rest of the team, and the ones that are most successful, they've got that synergy. Beck, I'm not sure if you have anything you want to add there.
No, I was just actually messaging the team on chat saying what a great slide it is, and can we share it with our members?
Yeah, so we'll send this slide out. So I think, and again, that's one of the reasons I really wanted Marc, to be on the call, is that we're really focused on this sort of scaling up sort of workshop concept. And I think this is going to be a natural, talking point for us in the ecosystem. Just shifting gears, because although, I know we wanted to talk a little bit about the regulatory environment. And I guess maybe, Beck, you can just give a bit of an overview in terms of what's on the agenda coming up. Obviously, you've been working quite closely with Senator Hume, and I know FinTech Australia has provided a lot of input to some of the guidance notes that came out at the end of last year. But what do you think is going to be happening on the regulatory front in the next 3 to 6 months?
Firstly, yesterday we had a little bit of a bad news. The final report for the Senate and FinTech inquiry was meant to be handed down in April, but it'll now be handed down in October. So I suspect that means another round of hearings, which will be the fourth round it will be FinTech Australia's 6th submission, but it will be everyone else's fourth submission in our 4th round of hearings. So I suspect that actually to cover the digital asset blockchain space a lot more than the previous work. In relation to what's on our agenda for the next 6 months, we've got, well, it was a massive positive that CDR launched 1 July last year. There's still a lot of work to go in relation to access to the regime. So for the people on the call, the ACCC's rules were rolled into Treasury, which means we're actually starting consultations again on tiered accreditation. And tiered accreditation is essential to get a network effect and fintechs connected to the ecosystem. At the moment, the cost of connection and compliance is too high for most businesses that are not playing in that space to want to go down that route. And, you know, intermediaries already play a very valuable role in data exchange at the moment. We just want them to do it in a more secure and effective way through CDR. So tiered accreditation and also getting trusted advisors access to that regime. They'll be starting consultation in energy in CDR as well, but we need to look at payment initiation on CDR in the next 6 months, because obviously the MPP is rolling out the NPS, but that shouldn't be the only way that you should be able to initiate payment through CDR. You should be able to put it through any rails that you choose to. So CDR is a massive focus at the moment. We also have another focus on, and I touched on it before, debanking. We have a lot of our payments, particularly our remittance companies, getting debanked by the Big Four, so they actually can't run their businesses, which is anti-competitive. We'll have the second round of the payments review. So obviously Scott Farrell did a lot of work in relation to payments, and I'm also doing a lot of work at the moment behind the scenes in relation to digital ID. So, you know, the government's invested in digital ID network, but what does that look like? What's the framework? But more importantly, we're not going to solve for it at the moment, because only Equifax and Alien have access to the electoral roll, which is very anti-competitive in the RegTech space. So for those online, FinTech Australia does a lot of policy and advocacy work. We're known for it, so we're actually championing, which digital ID should technically be a RegTech thing, but we're the ones behind the scenes doing a lot of work in that, and we'll also continue to push on R&D and some of the other core things that members are focused on. Do you have any other bits, Mark, that you think?
Great question. Look, and to be fair, this isn't my strong point compared to, say, you, Rebecca, who is like on the coalface. But I think one of the big things from a regulatory point of view is that I think the Royal Commission, and I used to be a financial planner, so like the Royal Commission was quite interesting from a, I think that it identified a lot of interesting places that tech could play. And I think that one of the things that I'm really hopeful for is that, like, as we go through and hopefully get these findings in October that allow us to be able to see what, like, you know, the next stage of this is going to look like, I'm really hopeful that, like, Australia starts to prioritize tech as an industry that allows us to be able to best in world in some of these things. And so I guess, like, nothing more to add except for the fact that I'm really hopeful that we could actually use this as an accelerator for the growth of the industry, rather than putting extra legislation in place that could, you know, cause more friction points, if that makes sense.
And I think, you know, and Beck, you said a lot of different things so on there. So I think there's a few key points. One is, I think, CDR, you know, in terms of, you know, I think a lot of people thought it'd be a bit more advanced. Obviously, things are a bit slower there. And so I think it's going to be next 6 months, what happens there with the accreditation and the data access. But, you know, I think that what I just wanted to highlight is that, you know, probably the work that you're doing, I think is fantastic in terms of the advocacy. You kind of mentioned behind the scenes, because you know, I think it's quite important for the sector to make sure that it doesn't become anti-competitive. You know, so if I flash back to 20 years ago when I landed, you know, from the US to Australia, there was an element of anti-competitiveness. You know, industries were dominated by 3 or 4 companies, and so again, if I look, the fintech ecosystem, I think, is on the edge. You know, I think we want to keep that innovation. We don't want it to become demoralizing for companies that are in this particular space. So I think the next 12 months are quite important, because I think CDR is a great touching point in terms of allowing a lot of this innovation to get wider than, say, financial services, which it is now. Sorry, Beck, you were going to say something before.
No, I wasn't. I know I was just on you in the next question.
Yeah, so you don't know where I'm going to go. I'm jumping all over the place. So so I think in terms of, you guys touched a little bit about the Royal Commission, but I guess that's an area that kind of was obviously a lot of momentum in the lead up to the pandemic, and then obviously the pandemic hit, and there's been a bit of a moratorium on that. I guess, Beck, what do you think is going to be happening in 2021 as we get to 2022 in terms of the impact of the Hain report on obviously the wider financial services ecosystem?
Well, let's rewind. Well, how much of the legislation is going to get passed, I think, is the key question. We had 12 months of waiting due to COVID. I feel like some of that Hain legislation that was proposed has actually been put on the back burner due to COVID. I think other priorities for the government have popped up, particularly given it's going to be an election year. So, to be honest, I don't actually think we're going to see much. The responsible winding back of the responsible lending laws won't get through the Senate, which is also probably counterintuitive to the Hain stuff. So, to be honest, I don't think we actually get to see much change, because I don't think much is going to get through Parliament.
Okay. Mark, any other comments on the Royal Commission before we move to global competitiveness?
I mean, I'd like to be more hopeful that there is opportunities for the financial services sector to revamp, but at the same time, I think Beck is closer to the political side of this, and so if Beck says that the chances of that are low, then maybe there's other places that we can concentrate to try and maximize advantage for fintechs in the short term.
Okay. So thanks for that. I think there was one question that came in from the audience about regulation or lack of regulation around some fintechs. The question didn't elaborate on the subsector of fintechs, but Beck, do you have a particular view in terms of how regulated do you think the fintech sector should be?
Sometimes regulation does not move as fast as innovation. So I think we've seen some real positives in relation to the two codes that was established. Obviously, the small business lending code and the buy now pay later code are examples of where we've had self-regulations by industries that have innovated faster than the regulation enables. We've got to make sure that regulations protect consumers from bad outcomes, but also regulations can prevent innovation from occurring. So we've got to really strike the balance between the two. And I think that, the self-regulation of the buy now pay later code is a great example of where a sector's got together and said, well, we currently don't fit into any regulatory box, but what can we do to give more certainty around our products and consumer confidence? And I think that's a good balance. And where there's parts that don't have that ability, that's where we need to see if we can form some regulations that really do have protections in place without being inhibitive of innovation.
Yeah, I think that's a good point, because again, if I flash back to my US days, when the US regulations in terms of US registrants with the PCAOB requirements become an extra burden for companies, and you saw a real people not listening in the US, and I think that probably and it's taken we're sort of 17 years into that. So I think regulation has to be there in the right place. Obviously, protect the customers is just coming up with the right balance. Just shifting a little bit, because I know we only have about 10 minutes left, just to the global stage, and I guess I wanted to get both your perspectives in terms of the pandemic. Do you think that this has been what impact will this have on Australia's global stage for fintechs? So Beck, I'll start with you. Do you think there's great opportunities, or do you think the access to talent is hard because people can't come in here? Or do you think you're starting to see some countries really moving up the innovation fintech ecosystem space?
Well, I think that's interesting. So the government's invested in new entrepreneur talent visa, and particularly in tech being a priority sector. So I actually think it's quite good to get talent in onshore. Obviously now also working from home, and that ability to work from home for senior people allows companies to hire offshore to bring talent in. And I'm quite an advocate. We've spoken about this, Tim, before, that I don't think people will be working from home forever, but for senior roles, you can definitely hire that talent offshore. I think the hardest thing for companies at the moment is exporting overseas. So some companies have been able to do it by putting boots on the ground and having really good connections through VCs, or using UK DIT or Austrade to make their first hire. But virtual delegations haven't actually proven to be that successful, while they may prove successful in relation to getting people an understanding of the market and insights and things they need to get ready. Nothing changes from actually having the ability to travel and move around. So I think COVID has changed how we can hire, particularly even if you can hire in Darwin now, if people can work remotely, and we can definitely bring talent onshore through the new visa regime. But I do think, that exporting piece has become a lot harder during COVID.
Yep. Marc, what's your view on that, I guess, in terms of when you're working with startup scalable companies, are you starting to hear people that are wanting to go global, or are people just really staying focused, within Australia right now?
No, look, if I'm honest, like most fintechs that I speak to are thinking global from day one. They typically use Australia. It's not too dissimilar to the Afterpay model, where you use Australia as a test case to be able to show that you have a product market fit or a market product fit, that you use New Zealand or Southeast Asia as an example of being able to go to and kind of build out a tiger team that can do your first international expansion, but then looking out that there's always aspiration to grow globally, I think. But I think that, look, maybe I'm just optimistic in the nature of my role, Tim, but we had some amazing talent come back at the start of COVID because they either wanted to be close to family or they didn't want to be stuck overseas. Australia has been so lucky through the pandemic. Obviously, I don't want to take away from the fact that a lot of small businesses, particularly at the start, had a really tough time. And the health part, I don't think I've ever seen a situation, and I might not again in my lifetime, where people were genuinely fearful for their health, their personal financial situation, and their professional or their business financial situation all at the same time. So I don't want to underestimate that trauma, but we've gone through pretty well. And now I'm seeing, I guess, I have friends in the US, particularly in the middle of the country, who look at my photos on Instagram and be like, my gosh, we would love to be seeing our friends, we'd love to be seeing outside. And I take for granted the fact that around the world, they are still locked into lockdowns. And so I think that a lot of the fintechs have been very open to acquiring talent in whatever way best suits their culture for their business. I know that a lot of fintechs that I've worked with have taken some fractional executive type situations. So there's been people from San Francisco or Singapore who they've brought on in a acting CTO or CFO type role that allows that person to have multiple companies they're working with, but it gives the startup to a chance to work with somebody who's experienced in that marketplace, which has been really successful. Then lastly, and I guess the most importantly, is that as we start to and as Beck alluded to at the start, we have changed how we do things. I don't think there's going back to normal. And so I think that a fintech is unusually well placed to be able to take advantage of increased e-commerce shopping, increase of online payments, increased QR code. There's a lot of things that I think are going to draw talent to this particular sector. And so I think that I'm really bullish in our place in the global ecosystem. Sydney is considered a financial hub. By proximity, that means Melbourne is as well. Hopefully Brisbane will get there sometime soon. But I think
powerhouse. Don't underestimate Melbourne.
That's it. And
I know. There's a bit of rivalry on the call.
That's it. But it's super exciting to see that. Like, I think Australia has a great brand and market from a livability point of view. People typically think that our tech talent is world class. We just need more of it. And so I'm actually really bullish that the next 12 to 18 months we're going to go up in whatever rankings we consider for startup placements around the world. I think Australia is well placed to take advantage of what's happened over the last 12 months.
We do punch above our weight. We've got, I think, 5 unicorns for 20 million people. So definitely punch above our weight, and we've been consistently doing that.
Yeah, agreed. And we have some amazing expats overseas who are coming back, like with that product management experience that we haven't always had. And so I'm super excited.
Yeah, and I think just a couple things on that is, I think once the borders open back up, I think we'll see a re-influx of Australians that want to come back here and use this as the base. So it's going to be quite interesting. I was on a global call yesterday, and they were referring to an Australian fintech that's based in the UK, and just had to remind the people that actually they're Australians that are doing that. So I think from an Australian perspective, definitely well represented, from a global stage. We only have a couple minutes left. I just want to get a few closing thoughts, I guess. Beck, you've seen the sector come a long way. You talked about some of the issues and challenges next sort of 6 months, but where do you think we'll be sort of a year from now, so we can record and get you on in 12 months to see how well you've done in terms of your vision?
I'm going to have to match my vision from last year. So I think hopefully from 12 months from now, we'll have the access requirements to CDR all solved, and we'll have a thriving fintech network on the CDR regime. Also, we'll have all the mutuals connected, and also like to hope that by that time we've seen some consumer education, but also we're progressing down the path of payment initiation, which will drive the innovation. I hope we've solved the access problems in relation to getting fintechs on the MPP rails. And I hope that we've, as a sector, really championed things that are critical to the ongoing success of funding. So we've championed changes to the ECVLP or ESIC guidelines that I touched on earlier, or we've further pushed R&D to be world leading, because currently we're not sitting in a world leading place, and places like the UK continue and New Zealand continue to make R&D a priority. I pitched the government in March last year, in every submission that I've done since COVID, to do a VC matched fund to enable our companies to scale. In the Khalifa report, which we didn't touch on, which is the UK's report into fintech, they proposed exactly the same thing that France and Germany did, which is a fintech government-backed fund. I'm not saying that the government every fintech. I'm saying they back fintechs that have already been backed by VCs. So we're the VCs do the due diligence, but I hope we've made some progress on that. And I'd like to say that I'm very hopeful. So we've been hopeful about this for 2 years now, that the neobanking sector in some form really takes shape in Australia. And while we do have successful stories like Up, let's hope to see some more innovative banks like Afterpay Money start to take shape across Australia. That would be my
Well, there's a lot of hope, so we'll keep you to that 12 months from now. So Marc, I guess changing tact a little bit, any last advice that you'd give to a fintech startup, trying to become, more mainstream and become a global business?
Yep, got you. Like I would say that now is the best time to be working in startups and scale-ups in the the 5-year career I've had. But I think more broadly speaking, now's a great time to be thinking of building and growing and scaling a company. I just like to both your points, Tim, and to Beck's points. It genuinely is a combination of networks with people who understand what you're going to be trying to achieve, who can facilitate that, a big vision for something that is globally facing, and the tenacity to stick it out, but also finding a market that generally needs what you're you're doing and matching that with a viable business model that allows you to scale, and particularly to create free cash flow. Like if you can like model a great business model with a market demand and then surround yourself with people who have done this before, fintech in particular is like the strongest vertical of like startups and scale ups that Australia has. And I don't see that changing in any time in the short term. And so like if I'm honest, if I'm talking about a 2-year prediction, Tim, I genuinely think that there's going to be like 2 to 3 unicorns that come out of this period of time in fintech that will look back and go, that makes perfect sense. That literally were either companies who pivoted to take advantage of the market situation, or who started during the pandemic and really took advantage of this change in digitalization in the economy. So I'm bullish. I think fintech is like, definitely a sector to watch and a sector to back. And it's a pleasure to spend more time with you and you both to be able to talk about what this is going to look like in the next 2 years.
Well, thanks, Mark, and thanks, Beck. This brings us to the end of the discussion. I want to thank both of you for your valued insights. And Beck, Mark, and I will see you down at the Intersect Festival, in May. So we're looking forward to coming down there. And hopefully everyone that was listening thought this was a great session. And I'm looking forward to having Beck on again at another future session. So next, in terms of the next FinTech Fridays that are coming up, as I mentioned before, April should be a great session because we're talking about payments and lending. And we've got Anthony Nance from the CEO of Wiser. Obviously, they're doing quite well in the marketplace. And we'll also be introducing Ross Widows, who's one of our new cybersecurity partners. So that's going to be the April session. In May, we talk about open banking. I've got Jill, my friend from Buffalo. She's coming back on with Mark Griffiths, someone in our risk advisory partner who works on CDR accreditation. And then the third month is looking at the federal budget, Michael Bassina and Graham Wakeman again. So we've got a good lineup coming up over the next quarter. So hopefully everyone will be able to attend those. The details of this webinar will be shared with you afterwards in a follow-up email. And finally, before we close the session, we'll be looking to do a short feedback survey. So again, hopefully everyone enjoy the session. Have a great Friday. Thank you very much. Have a great day. Bye.
Thank you, Mark, and thank you for BDO's continued support of FinTech Australia. We really appreciate it.
Thanks, Beck. Okay, talk to you later. Bye-bye.